Good morning. Welcome to today's daily update on this channel. My objective is to make you better traders. And this channel offers you insight into what wave is all about, into what structure is all about. It offers you clarity, to which direction of trade or the direction in which our trade is going. So that is the objective. It's going to be a quick update. I released a video yesterday, which I believe some of us have probably watched. And this is also an update looking at, a bigger picture of what the trade is doing. One thing that is obvious is how dynamic the structure is. How structure can change in the middle from the lowest time frame to the highest time frame. So structure can change in the middle. You could have a perception of this is where the trade is going based on the structure that you can see. And you must be able to tell quickly where in the middle, the structure has changed. The challenge for many is to even be able to interpret the structure they are seeing, because the structure can mean anything to you. But now, and again, you can see the challenge, because here I measure on one instrument to trade. You can trade some people can trade indices, that is DXY. You can trade anything that you wish to trade. But euro dollar is what I measure on. And so when you see how dynamic, how variations occur within an instrument, and you have a day job and some other things you're doing, to put your energy on different instruments can be quite something else. Very straining and draining for you. So I will always advise that if you have a day job, that you don't do more than one instrument. If you don't have, a day job and you are strictly a forex trader 247, then probably you can look at 2-3 instruments. Why? Because when structure changes, you need a lot to tell you at a level that you want, a notification, because also trading, you require to have, a trading view, which is probably premium or something less, a pro trading view subscription. So if you don't have a pro subscription, so you might not be able to have notifications that tells you, oh, something has hit the level that you want to look at and see, oh, what is happening at that level. Otherwise, you will allow your trade to drag into an extreme negative. So when you are a pro, when you understand what it's all about, you can quickly tell that, oh, for me, structure had changed. At what level do I close in a small loss, or I close in a small, gain, or I close in a decent gain? So losing too much, it's really not an option for me. And I want you to know that losing here is not an option, or otherwise you will blow your account. So, and here is to teach you how not to blow your account, how to look at structure, and perfect your trading skills. I'm talking too much, right? Now, let's dive into it. This is US dollar index. So we're going to look at US dollar index. We're going to look at DXY, and we're going to look at, the longer time frame of euro dollar 2. So those three should give us a clear perspective of the direction and what we are seeing at the moment. We had this thrust down in the US dollar index, which means that for here, dollar was losing strength. And what we are seeing now, it's not a change of direction for us, but when you have a momentum or a move, then you must have a correction. So now this is a monthly or a weekly correction. So now we are seeing a move, and we are seeing a correction. So then we know for sure that move will not just come like this and end in a correction and just continue to go up. So there must be a proper completion of this move of correction. Of this move in terms of its correction and the counter move for us to now say, okay, this is what next we are going to do. Because what next we are going, we can probably tune or to bigger time frame like monthly time frame to see. But let's just stay here. This for us, we know, is a complete 5-wave structure to the downside. And yeah, we have 1, 2, a 3 like this, sorry, a 3 in the middle like this, and we have a 3 of 3, a 4 of 3, then we finished with 3 here properly. Okay, so let me go again from here, from this point here. So we saw the move. So a 1, a 2, then a 3 completion, and a 4 here, and with 5. So this is a complete 5-wave structure that you expect in a motive wave. Okay, now we are now seeing this correction. So this correction, so whenever we finish this correction, we must have another structure to complement this 5-wave, which must be on the other side. Now that structure, when it comes, whatever it gives us, if it gives us an 100% extension or a 127, 123 extension, and it stops right there, and we had probably another move to the upside, then we can tell that the movement to the downside would have been completed, and that we are going to go up and break the top. And we are talking of something that would take more than a year before it occurs. That's what we are talking about. So, and if it's going to go beyond that 127, then we now know that this is going into a bigger trend, when it breaks below 123, 127 extension. But for now, what we have, let's deal with this. Okay, in dealing with this, then we can see, there has been so many perception of what we have in the middle here. But again, we must have the correct perception. Some people say this is 1 with 1, with 2, with 3, with 4, and this is with 5. But this is not a triangle. It's not looking like a triangle to me on the US dollar index. It's not looking like a triangle to me. And we must make sense of what this structure is. It's very important that we make sense of this structure is to interpret what this one is going to do. For me, this is also a correction. This has been a correction, a correction, a correction, a correction, and this also has been a correction. Now, when we're going to have a big wave like this, we don't want to miss it. And then if you are thinking, okay, it's going to be 1, 2, 3, 4, 5, 6, 7 before we turn down, is it going to be like that? These are the questions we are interested in answering here. Or if you think, oh, it's 1, 2, 3, 4, 5 that you think is a triangle, oh, okay, after this we are going to be going down, is it going to work like that? These are the questions. Is it a triangle? Is it going to be a 7 swing? What are we seeing now? After taking a close look at this instrument DXY and US dollar index, I can tell that what agrees, what is about 90% sure that the structure is telling us is this. Now, we are going to take a close look, and these are giving us what looks like a 5-wave or a structure here, or let's say A here. These are giving us A. Now, the all of structure that you are seeing here in the middle here is actually one structure. This is actually one structure. So this is the first structure. From here to this point is actually a structure. And this is the third structure. I'm going to go inside of it for you to understand what structure we are looking at, because this is meant to confuse you. This is meant to make it difficult for you. So at the end of the day, so we are seeing these as a structure, which is structure A. And here in the middle here, we are seeing a B structure. And that B structure is now divided into three parts, which is A of B of B, and a C of B. And this can only be one thing, A structure, which is the last C structure. That is what it can be. And if they decide to do otherwise, we will see. But we have to make sense of this structure. Now, in making sense of this structure, after this wave went up, we cannot make sense of a B until this one forms completely. Now, what we can see here is that this wave thrusted down. And in any school of Forex, wave and structure, you first see this wave as a correction to this. That's the most unfortunate thing. You first have to deal with it as a correction to this, as if, oh, this is A and a B. And when this is going up, you have to treat this also as a triad. Oh, A, B, C. If it's making any sense to you, you'll tell yourself, oh, it's making any sense. And you have to treat this, oh, as a possible breakout of that structure. Because once you have an A, B, C, a B, C complete of a structure, then you should break down to continue this. And it didn't happen. So when it didn't happen like that, you have to realign yourself and say, okay, what exactly it is? And this one is going up. How do I interpret this? That is where, it comes in. And again, on this structure, I can't see a triangle. I can't see a triangle. And what sense would it make to you? If this one had gone down like a five-wave structure, and which it is to us in a way, this last part as a five-wave structure, then if this had gone down as a five-wave structure, then is that appropriate? Because if it has gone down like a five-wave structure, it should actually be a continuation of the trend, and we had this. So, and that is how they can make it, a messy structure for us, and you have to continue to decode. Now, looking at this now closely, we saw an A of B, and we saw a B of B. And this B of B actually an A of B and a B of B. This B of B is what we are trying to now decode, that if this is an A and this is a B here, this has to be the A of B and the B of B, and this has to be a C of B. And that's the only sense it's making now. If the one in the middle is a B, which rightfully so it can be, B can be anything, then this can be an A of B, a B of B, and a C of B before we have the last leg of A, B. So let me bring out the instrument so that I don't waste time here. So let me switch to the daily for us to see better. Now, in the daily now, so what we can see here is that we are treating this as an A possible B, and a possible C. And that the B here, which ended here, this one can be the first part of B, and the B of B, and the C of B. So in trying to make sense out of here, then we can now understand and see that now here, this A of B initially was measured against these as a wave 2, and that you expect, okay, if it's a wave 2 to this, the price should continue to push higher. And it didn't work like that. And they came here, they forced it down. That nullifies this as a correction to this. So which means this is a new wave. Now, if this is a new wave and you are still thinking that, okay, this new wave, it's going to go up. Now, they stopped here. Now you have to going to look at, okay, what correction is this to this? And this is had about over 61.8, about 70 something, okay, which now you begin to look at, okay, could this be a possible zigzag to the downside, which it is at the end of the day. So this from ear to ear, finish your B, and your B, you know, also can probably be a triad. Like this B can be a triad in the middle. So that's one thing, again, that you must understand. In as much as in the bigger picture, we have this B as A, B, C to give us a big B, but this B also can be a triad in the middle here. So where this B, after having the A of it, the B of it, and the C of it, so that means if I'm going to use something to tag this particular B in the middle, because the bigger picture of that B is this, A, B, and a C. And this also can be divided into two, regardless of how they want it. Or you can even say, okay, this is A, B, and this is C, where the C has to run like a 5-wave structure and a truncation. So, and it will still make a sense to us. Now, why that has to change is because now we're having a break, about a break of this structure that tells us that price is going to break this one. And when price breaks this one, now it gives us a clear picture of what we are seeing, or a clearer picture of what we are seeing. So this becomes an A at 70 something, and this has to turn down to give us this B has to turn down to give us the C leg of it at an 100 or thereabout. So we can see A of B and the B of B had this. So this extension can be about 100 or 127 or 123. So it gave us, you know, approximately an 100 here. So which stops this as C. And this makes a picture of a zigzag. And for sure, in a zigzag, of course, of B, and we could have had this as an A flat, a combination of a flat, and also this also a combination of a flat, and also this one, it's like a zigzag, and where this one ran 5 waves to the downside to finish this, a 1 and a 2, and in this, they finished a 3, and it was truncated as a 4 and a 5, and it ended here. Now, after computing A, and now we have completed a B, so where C is going to be is now depending on when you measure this and to what retracement is your A to B. So we can see that the retracement here, you know, can only give us, because when you're looking at probably something that is close to an 100 here, you can only think of an extension to the upside of about an 100 here. So when you pull your plugs here, or your instrument to measure, because that is the only way you can measure from here down to here, has your A to B. The whole expanse A to B here, and in terms of what it can give you, because this is looking like what would give you, at the end of the day, a running flat. That is what it's looking like. So when you do this, you will see that your 100 extension is somewhere around this area based on what these are giving you. Your 100 extension will be around here, and the 123 will be around here. So that is what it will give you. So we are saying that price may put a plug here. Price may pull a plug here around this area, and the price is going to turn down. That is the information we have been able to gather based on this structure, which is correct for it in terms of measurement and fib relationship that these waves could have to themselves. Okay, now looking at this wave clearly now, we see this wave as a possible single wave of C if it's going to be a running flat. And a running flat, of course, we know can stall at 61.8 or max and 100 extension. So this area that is broken, this area looks like the likely place that this price may halt. And if we begin to turn down, we should be turning down with the aim of at least doing a B, doing a B, probably to go up the more and finish another leg before turning down. But what will make most sense is that this will continue to go down to break down. That will make the most sense. But you have to take it, piecemeal. That, okay, first, let's see it as if we are going down to do a B to this, A. So this C cannot be, A of C, B of C, and a C of C. But I will not pitch that. Based on the structure this one has given me, I can only see what looks like a running flat based on the structure of A and where this one, paused. It can only give me a structure of a running flat that can extend not past 100. If this one is going to probably extend far beyond this area, then this could have probably broken down. But we're going to also look at other instruments to be able to fine-tune everything together before we go further. Well, now let's look inside of here to see what the price has printed here. Now, going on the daily here, so it's clear that we can see a wave 1 and a wave 2 here. And this is fast growing to become what 5 waves will give us. And clearly so, this and this is at a retracement of 50%, which is still correct for a wave 2. And if it is like that, the minimum we expect a wave 3 to be is as 161.8 extension of between a 1 and a 2 here, which will stall at exactly here. So wave 3 has not been taken. So whatever we are seeing here, I will still see the price will do its own correction here to touch at least or break a bit above here to confidently relinquish wave 3 position. And that is when we can probably have a wave 4 and have another wave to the upside to finish. And if that now happens, if we have a wave 4, once we break this level or touch this level and we have a break wave 4, then we can now tell if wave 5 is going to be truncated near 3 or not, or is going to go past it before we begin to move down. So this is going to happen between now and the end of this month. That is what I can see here. Now, going inside of a 4-hour time frame to look at it before we look at another instrument. For me, like what I've taught us, now we are seeing clearly that this is like inside of this wave 1, it has built itself also into 5 waves that we can see 1 and 2 and a 3 and a 4 and a 5. And we have a correction of a B, which is 2 here. And we have a 1 and a B in the middle and a 5 wave to the downside here to finish this one. And we are going up now. So this is the beginning of 3. We are 2 ended with 3. And now we are seeing that wave 3 may have reached the peak here and almost touching this area. And the way this has been consolidating here agrees with what the end of wave 3 most of the time look like. And, when we cross this line here, this trend line here, between here, the beginning of 3 and here of 3, and that will tell us, oh, probably we have formally finished with 3 and we probably coming down to do a wave 4 and do the last push. So what I'm trying to say is that even if we take it from here, that the price touches here, you must know that your wave 4 can break this area. How do we know? From this wave 2, if you take it up, I'm teaching you a whole lot at the same time. You must know that at least if it touched there or break beyond here, you can withdraw your wave 4. Then you know that your wave 4 can come to 38 or 40, but not more than a 50. So in between here, that is where your wave 4 can come, but not beyond, based on the current structure of where I put where wave 3 can be, and not more than this point, because price will not break just like that. Price will deviate to give us a proper deviation. So that is what I can see now. So once we have the wave 4 around this area, we have more one thrust to the upside, to finish the 5 of that wave, which may break here or not. If it's going to break there, then we're going to see why it's going to break there, okay? And before price begin to pull me to the downside. So we are almost, and I don't believe this wave is not complete until at least it hits this area or a bit above it. So that's what we are saying. Now we are going to wait to see as they are doing their mess. So, and that is that on the US dollar index. And this is very clear to us. It has gone into, yes, 161.8 is around this area of this extension. But in terms of the bigger picture, of course, I've shown you what we are looking at. In terms of the bigger picture, that is going to be A, B, and a C, a running flat, which may halt at this area. So this is still a potential area that the price may come to. I don't expect, based on the structure, I don't expect the price to run here. I do not expect it to even come here. So these are the areas, because it has gone past 161.8 in terms of a flat, but it can get to 76 or 100 at this point. So we're going to, so let's look into another structure, another instrument, which is the DXY, and see, because that one is more like a mirror of euro dollar that I gave us. So, and we're going to make sense of what structure that has given us, which is different from this structure, but they are all saying the same thing in a way, DXY now. So looking at the DXY, so the US dollar index gave me a clear perspective that, the DXY may have given you something that looks like a triangle, that this and this, that's the upper edge of the triangle, and this is more or less slanting, probably a slanting triangle from here to this point. And so if you clone, you probably will expect that, or the price will, once it hits the trend line created by, the trend resistance here, price is going to fall. See, whatever you are seeing, whatever your trend line is telling you, price may not respect that, but price will force to respect the structure that is building. And, for you to understand the structure, and that is the game is beyond your trend line or support, is what I'm trying to let you see here. The game is beyond your price support and resistance and your trend line and your channels and all of that. All those ones will just tell you, okay, oh, there's a bridge here, or maybe the price wants to go to the crossing and breaching that place, and it's not turning on that trend line. Okay, maybe price will, come back to retest. When it's retesting, where is it going? So you don't know for sure where it's going, and you think they are playing a trick on you. No, they are not playing a trick on you. They are printing a structure which is difficult for you to understand what the structure is. Now, pretty much the same here. Of course, I've told you this is also a 5-wave structure, but a different, in terms of correction, is different. So, but it interprets the same way. And looking at this is also an A, and in between here is a B. Now, in US dollar index, the B is almost at par with the limits or the origin of A. But in this case, it pulls right below the origin of A to give us a B. So, and it's in a way the same from here down to this point, this is A of B, B of B, and a C of B, just like we saw on the US dollar index. So DXY is giving us the same thing, and this is going to be a C. So if I pull out the instrument for us to look at the measurement, let me go to the daily so that you can see. I've almost, now, if I pull out the instrument to look at that, now this is the A, the first wave, and this is annotated in red, and the B is annotated also in red. And so if you look at the A of B and the B of B, just like I said, and this is also occurring at about 70-something retracement, but of course, we know it can be a zigzag to the downside because we are looking the right inside of the B alone now. So inside of a B, A of B and a B of B, and a B of B had done a retracement of the A of a B at 70-something, so which can give us a zigzag. And this is exactly a zigzag level here. Exactly a zigzag level. So because it gave us a zigzag level here, so we now know that, okay, this is a zigzag in the middle. And unfortunately, when this zigzag is forming, you will think the price is going and is continuing to, the trend has continued. So you'll be interpreting that, this is one is a 2, and this one is a 1 of the new move, and a 2 of the new move, and we are going to the tip into the third part of the new move. Yeah, there's no crime thinking that way. But when your structure has changed in the middle, then you must know it has changed, because you will think, we are going to a new structure, and this one is only correcting this, and it's going to come down to, well, now we are seeing that it has eroded this. So looking at the structure, then you now see, this is what the bigger picture is trying to print. Then we can now understand where this move is going to relinquish its position for us to go more up. Now, looking at this now, without wasting much time. So we now know that this is A in red, and this is B in red, and this is a zigzag in the middle. And so if it's a zigzag in the middle, that has complete whatever sense this zigzag has meant now. So we now have to look at, in terms of this complete wave, A is complete, B is complete, what retracement or what extension is B to A? Now, that is what will now help us. So if you get down, you can do your own retracement and extension to see if this indeed is a zigzag here. So for you to understand what is a zigzag. But in terms of A, origin of A to the end of A, to where this has terminated, looking at the extension here, the extension of A to B is actually a 123. So which tells us that if it's a 123, this can only be a running flat to the upside. So if I take my instrument to quickly help you to see that, from the beginning of A here to the end of A, so you can see what I'm saying, that this is actually a 123 here, exactly at that point of 123. So that is what you can see there, exactly at that 123, and the price is printing up. So what you can only expect here is, now you are going to look for this retracement in terms of A to B to get a C. And if you're going to do that, this is what is going to give us. You expect it to at least get to a 61.8. If it breaks beyond 61.8, it can be at 78 or 100. It can turn down anytime once it breaks a 61.8. So, but what for sure will tell us where it's going to go will now be the internal architecture of this. Now, looking at a pari passu with here and here. So now looking at this now, in terms of AB retracement to get a C, price already hit 61.8 that we expect. Now, this is 76, between 76 and 78. We may get a reaction or not. If we don't get a reaction here, price may pull towards this area. But I doubt, from the current structure, I doubt if price is going to get past beyond this area of a correction. So the price may just, continue, get around this area. But we are going to turn, we are not going to break this top here. I don't see that. Of course, we'll break this top. I don't see price breaking this top. That's what I'm saying now, based on the structure and what we are seeing in terms of A and a B. So 61.8 is taken, and this will be a decent area to look at your price after you correct this. Now, after doing that, so we are seeing that the DXY and the US dollar index had shown us clearly that, oh, the picture of everything that we are seeing is just a running flat. That is the picture that it has built to us, even though one turned at 100 to go up, the other one pushed down, to a 123 before correcting to the upside. So which now looks like the US dollar index will be touching 100 before it begins to correct, and this one may be touching a 78 or thereabout, not touching 100 before it breaks out. Now, looking at the internal structure is the same thing here. This is what will help us to see, because this is also a 50, and we expect at least price should touch this area of 161.8 extension of 1 to 2 to at least relinquish wave 3 proper. So we need to see that. And when price touches that, and we are going to now begin to look at, okay, the possible possibility of having the fourth wave to the downside, and to know where exactly after the fourth wave the price can get to. But at the same time, we need price to touch here. Anything I give you now is just an idea of what price may do. It will just be only an idea. So, and again, I'm telling you, this is a structure that has to be broken to the downside before you can say you are correcting with 4 proper. So price may break here, and if it breaks here, it's not going to go all the way down. It's going to pull back up. So it depends on what risk you want to take. If you want to, of course, I won't say you should begin to sell the DXY from this level. We want to allow it to go up, at least hit this place properly to complete a wave 3. And of course, price may break beyond that, just like I showed you on the US dollar index. So, and if it hits this area, so we are looking at a correction turning, up, from, of course, when it's correcting, it doesn't have to be a 38, it can be a 23, it can be anything, because once you break the top again, then you know that you are no more in correction, so you are out of correction. So these are the areas that we, based on our analysis, that the price should not go beyond. So it should not even break a 50 before we correct the last leg of this wave to the upside and now begin to turn down. So once we should cross this area, then we are in a new wave to the downside. That's what I'm trying to say. So this is what we are looking at on the, so of course we can break this. And when we break it, and you're not saying, oh, it's a forced breakout, then you now understand what we mean by a forced breakout, that will break this structure, get to this point and go back up. And so you understand what it's going to look like if it's a forced breakout to you, and before it goes up to complete that wave, maybe at exactly at the dead of this point or beyond. So now with the instrument, with the idea and the knowledge we have gathered on both the DXY and the US dollar index, then we can now begin to look at our euro dollar. So looking at euro dollar, looking at euro dollar, looking at euro dollar, looking at euro dollar. So euro dollar fits into a clear perspective of also like a parallel triangle, and it's almost the same with DXY, but we are going to see where it's different now. We're going to see where it's different, and euro dollar is where most people trade, and it can be where manipulation occurs, but the DXY and the US dollar index should align us. So it's still the same, okay? And so we see this as A, and A of B, B of B, and a C of B, which is now very clear. This is a C of B, and the last part of it, of course, did a motive wave 5 to finish this. of course, because it's a C of B, also a C of B can be divided into 3, and which will have A, B, C. So that is what exactly it was, A, B, C, and for us to have this. Now, it makes more sense that way, that we have an A, a B, and of course, in terms of extension, pulling beyond here, that is where it's, the manipulation comes for euro dollar. The extension is not even 100. Let me bring the instrument out. Or before I do that, let me just go to the daily. So the extension here, we had probably this is A, then A of B, B of B, and a C of B. But the extension between here to give us what looks like a zigzag, that was where, if you are looking at euro dollar alone, you will get mopped. You'll get mopped and your account taken anyhow, because you don't have to interpret on that alone. You have to look at other instruments. So the extension here is beyond 127. Is beyond that. I think let me see. Let's see. Let's look at the extension. Of course, we know this is A and this is B. So the extension here between what A, B, C of B is, if you're going to look at this, I've forgotten what the extension, but I think it didn't play out like that. So we look at that to the A, back to the B. Okay, it's just slightly above 100. So, it's slightly above 100. But for the DXY, it actually connects exactly with 123. So we can understand that all of that variations that occurs, which will still be taken like that as a C, okay, a C of B. So we have B comes here, and that is the C of B. So the C of B, of course, also was divided into 3, which is the A part, the B part, and the C part, which are around 5 waves. So at times when you see 5 waves, on the opposite side, you must understand why it has to be 5 waves, because it just completed a triad of this wave. And we're now seeing something that looks like a 5 wave. Now, this part is where it's now looking funny. For the other two, it's really correct. But for the euro dollar, that is where the manipulation is. So you must understand that. Now, you might be thinking, based on what you are seeing so far, you will say, oh, maybe the euro dollar is weak because you want to push up, right? The euro dollar is weak. The euro dollar is too strong. That is why we are having this. Other instruments on euro dollar, US dollar index and DXY are actually pushed more downward to correct, but it's really more contracted on the euro dollar. So that makes it looks like the US dollar is far very strong. So the euro is far strong relatively. So because what we expect now that we know this is A, so what we are actually now correcting based on what we are seeing is not here to here anymore, because this is like a flat, okay? So which is A, and this is a B, and we are seeing it that the extension is almost at 100. So in times to now correct the whole of A to B to get a C, that is what we are looking at. So we'll be looking at also a running flat mode to correct that. So, and taking that as a running flat mode, and this is what is now going to look like from the beginning of A, taking it as a running flat mode. I'm going to end soon, and we can go back to work it out ourselves. Now, a running flat mode at least should hit 61.8 extension of a running flat, which the price had not gotten to. Now, should I be expecting that this price is going to stall here? But I would say no, based on the other two that I've seen, and based on the internal structure of this. Now, the internal structure of this has pushed this one clearly as a 1 and a 2, and a 3 is where the third wave is rather too sluggish, okay? It's rather too sluggish. At least a 161.8 of this should get in here. So if I'm expecting a 161.8 to get in here, okay, and this is where a 61.8 is, which means most likely it's going to break the edge of this trend. Now it looks so much clear that it's going to break this end of this trend here. It won't stall as 161.8 because it won't make any sense to this one. So at least it should get here. So if it breaks and gets here, there's nothing stopping it from getting to this point. So which means that the area where this can actually stall is in between here and here, 76, 78. That is where this one can stall. I don't see it coming to a 90 of this extension here, or of this retracement of the extension here of AB, topless of 100, which is at this level. I don't see it here. So this will be the likely areas we should be expecting a reaction. So, but if you ask me, it should get here and it can pull up from here, or it can even get here. It can get here. If it gets here, don't be surprised, because if it gets here, it will only be like a 50% of the entire correction if it gets to the broken red. What do I mean? Of this entire correction to this place, this is where the 50% will be. So it may not break this bottom and this bottom, and it will still be 50% of this retracement. So at this level here. So, but we will begin to see and look more into what the euro dollar is going to do. So euro dollar is going to be giving many people shocks, because if it's going to complete that wave, it might just make a fast run to the downside. And when it's doing that, you and everybody might be surprised and you'll be interpreting something else. But that is what is most likely or might just happen. Now, the recent move here, this is where we are still coming to, at least to make a sense out of the third wave. So 1 and 2 and the third wave around this area. And that's still how many pips to the downside? That's a whole lot. That's a whole lot. This price is expected to make it like 100 pips to the downside, if not more. It may be more if it's going to at least touch this area, at least this area. If I want to buy, I want to see what other two instruments are doing and what the euro dollar also is doing at that point, to know if it's going to run down and take 145 pips instead as opposed to 100 or about 160 pips. So I see it still pulling down by close to 100 to 160 pips before the end of this month. But if that's going to happen, it's going to be a rushing blow. It's going to be a rushing blow. So we should be expecting anything from the euro dollar. Maybe it should just be a sudden weakness from the euro dollar that will. So because it's wave 3 and they are messing it up. Because it's wave 3 and they are messing it up, this is where we must not break for now. So if you want to sell, this is an area. So far, price does not break beyond this area, but this is the first area that I don't expect. I can't even draw a wave 4, you know, because the wave 3 here, based on what we have done for the other two, should still get to at least this level. It's still far away from it, unlike the other two that are very close to it. How it's going to hit this point is what we should be looking at now on that. So so far, what has the price done so far since we opened the market today? So the price, based on what I gave the last time on the ABC correction, so we had one A, B, C here to thrust down, and we had another A, another B, another C to thrust down. So we are seeing these as also a new correction that we are going to have. Probably A had finished here. Let me go to another platform for you to see. So this platform. So we are seeing that there's a momentary break out of this trend now. or trend resistance here, or this the resistance here. The support had not been taken, but that resistance had been taken. So if we look at it, if I zoom in and look at it and see what this price may print, because of the nature of the euro dollar, so you must understand that this can be falling. So it may actually break this or not. It may actually break this or not. It may get to this area before we begin to go down. Then we now look at the structure that is printing. But we still know that the trend is still down. Okay. It can't break this, of course. This trend is still down. So what we can see for now is we see this as a possible A and a possible B. And looking at where we can get an understanding of this particular wave, if we are going to complete this wave, because if this one is completed as an A, B, C, and this is a move to the downside, we're looking at A, B, C. So the 100 is here, the 123 is here. So where we don't want to break in the immediate is 0.1, 1.09200 in the immediate. And that's where we don't want to break for now to see what is going to happen here. Of course, price may turn down from this level or get to this level. So, but we need to see. I think this is still going to correct further a bit up. So between here and here, that's what I can see for now. I'm going to stop here, and we'll be pushing more update later.